The main takeaway for investors from Fed Chair Powell's comments yesterday before Senate banking has to be it's now the default position of the Fed at its December meeting to discuss and likely enact a faster pace of taper, or as J.P. Morgan calls it, the turbo taper. In fact, J.P. Morgan writing this, it now looks like it will take a deterioration in the virus conditions to prevent the FOMC from deciding to quicken the pace of tapering at the next meeting. That's December 14th and 15th, of course. So now it's up to the new variant to prove it's bad enough to dissuade the Fed. Powell's comments came along with the Fed chair retiring the word transitory to describe inflation and otherwise raising his level of concern over prices. So what does this look like? Well, roughly every $5 billion increase in the taper announcement would bring forward the end of the Fed's $120 billion in monthly asset purchases, which are designed to help bring down interest rates. So if it doubled from the current pace of $15 billion to $30, the Fed would end the asset purchase around February with a little bit left over instead of May. I think that may be the odds-on choice here that the Fed doubles it. The faster taper, of course, raises the possibility of quicker rate hikes. But it's worth noting commodities, including oil, have all declined sharply. So both with the new virus scare and with Powell's comments. So it could be that a faster taper will do some of the heavy lifting in controlling inflation, limiting how fast rate hikes come or how far they have to go. Andrew?
Were you surprised that he threw in the towel on the word transitory after all this time?
No, I think he's been going there. That was not my surprise. My surprise was that he didn't wait a month before deciding on the faster taper. I went back and looked at the transcript, Andrew. I want to find the exact words that he used. But he said at the last meeting, remember that last meeting was only in the beginning of November. He said, we're prepared to speed up or slow down the pace of reductions in asset purchases if it's warranted by changes in the economic outlook. So you have to say, what happened over this last 30 days that the Fed would really be on a course to change its policy, maybe even double the rate of tapering. You did have a strong inflation report that showed wider inflation, but the question is, why didn't the Fed anticipate that? And then the Omicron thing came along, and I thought, the Fed is on a course to speed up the taper. I just didn't think it would happen so quickly.